Hello, very good morning to all, and today is Friday. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Happy Friday, and today will be the 2nd of February 2022. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimers first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Okay, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into that short-term technical outlook of the various cross-asset classes, let's have a recap of what has taken shape yesterday throughout the European session, the US session, and all the way to today's early Asia session before we start our daily dose at 11 a.m. right now. So within our expectation, the Fed dovish pivot is still pretty much alive, despite the fact that yesterday Fed Chair Powell tried to tone down the over exuberant take on market participation have on the Fed fund interest rate hike cycle. He tried to push back the expectation of the first rate cut to come in March. Initially, markets expecting close to 80% chance based on the Fed funds futures pricing around 1.5 months ago. That has already starts to being killed off. So right now, market expectation is only a 30% chance of the first rate cut to come in March. So right now, expectation now has down to shift down the road, down the calendar to close to actually around 60% chance of the first rate cut to come in May instead. But the key gist of the story over here is that there's very low odds that the US Federal Reserve will continue hiking in 2024. So right now, the odds are now skewed towards cutting interest rate, and how much will they cut in 2024, and also the start of this interest rate cut cycle. And that actually continue to be exhibited in the FX market and as well as the US Treasury market. So I highlighted yesterday over here is that despite the fact that the US stock indices sold off on Wednesday after the FOMC announcement, but that risk off scenario is not being translated into the US Treasury market and as well as the FX market, where dollar strength continue to be muted and the US Treasury yield, the 10-year especially, continue to slide downwards below the 200-day moving average, way below 4.06%, indicating to us that we do not face a liquidity upside squeeze condition that could hamper the earnings growth potential of high tech stocks and especially growth stocks. So with that, right, the stock market finally responded to this lower US Treasury yield that has been seen much earlier on Wednesday. So the market actually rose on Thursday. That actually came in within our expectation. So those who actually follow our daily dose, I covered yesterday in the outlook on the Dow Jones Industrial Average and the Nasdaq 100. All of them are going to exhibit bullish trend despite the fact of that 1% sell off on Wednesday. So all of them rallied right at their short-term pivotal support that highlighted yesterday. So the XPX ended yesterday with a gain of 1.25%, the Nasdaq 1.21%, the Dow Jones 0.97%, the Russell 2000 1.39%. And most importantly, most interestingly over here is that after the close of the US session yesterday, that means i.e. after 5 a.m. Singapore time today, the futures market, means the S&P futures and the Nasdaq futures, going to extend their gain in today's early session. So right now, the E-mini S&P future is up 0.6%. Followed by the Nasdaq 100 future is up a whopping 1%. So the reason of their ongoing positive feedback loop is due to the ex-post earnings announcement of the three mega cap tech stocks in US, which is Apple, Amazon, and Meta. So let me touch on individual one of them first. So the one that is most positive to the market, to most positive contribution to the ongoing feedback, positive feedback loop on the US benchmark stock index futures is the share price performance of Meta. Why? Because Meta, which is slash Facebook, you could see my screen over here. Let me expand my screen. So what they actually announced over here, yes, they beat earnings announcement, fourth quarter earnings, they beat expectation plus revenue as well. But most important over here is that they did a 50 billion share buyback. And most importantly, and secondly, in the first time in Meta financial history, Meta decided to actually announce a dividend. All right, so they actually plans to pay a dividend for the first time. All right, so that actually is very positive in a way. Actually they support this ongoing bullish trend of Meta share price. And do not forget, Meta has a significant weightage as well in the S&P 500 and the Nasdaq 100, being the top 5 component stocks. So they actually have a contribute to this ongoing significant feedback loop on the benchmark US indices going forward. So metal share price actually surged to a whopping 15% after hours. That's 15. Yeah, sorry. Surge to, yes, 15%, 15. So what I could see over here is that if I open the share price of Meta, okay, let me double confirm. Okay, so this share price of Meta over here. So they close at 3.95. Okay, so if you look at US shares traded after hours, so you look at the after hours, this is the big push up from here. All right, so you could measure the way they push up. 395. Okay, 15%, a whopping 15% increase within the after trading hours. All right, so that actually contributed the positive feedback loop that we're seeing right now in the Nasdaq 100 as well as the S&P 500 futures market that is trading right now during the Asia session. So another we call it positive momentum coming from Amazon. So Amazon, why is it important? Because it's also the top 5 component stock of the Nasdaq 100 and the S&P 500. Whatever happened in their share price will have a significant contribution or positive feedback loop in the movement of the S&P 500 and the Nasdaq 100. So the cloud unit jumped by 13%, easing fears of a demand slowdown. So net overall, they rose much slower than they rose much as the pace of increase is not as much as Meta, but still rather positive. So Amazon after hours trading, that means after the close of the normal US session, rallied by 7%. So if you look at the share price of Amazon, pardon me, no matter Amazon, okay, a bit of tongue twisting. Share price of Amazon in after trading hours. So this is the close of the, okay, 1 second, I think it's a bit slow right now. Okay, this is the close of the US session, 159. So if you go to the hourly chart on TradingView, you're able to see this push up as well of 7%. So one particular share, because both of them, if you add together, their weightage is pretty significant. So the positive impact of Amazon and Meta managed to dilute the negative impact of Apple. Yeah, Apple actually disappoint in terms of earnings forward-looking guidance. Why? Because if you look at Apple over here, is the stock price fall in after trading hours after company gives a outlooks suggesting weak iPhone sales going forward. Actually, particularly pretty much concerned about this 13% slowdown. If you break down according to geographical region, 30% decline in China. So due to its this US kind of ongoing tech rivalry with China, and also don't forget over here is that in the last few months, Chinese regulators actually urge Chinese employees who are working in government bodies, either in the central government or the lower down state regulatory bodies, to prevent them from bringing iPhones into their office. So that actually kind of hampered the iPhone sales in China, despite of the release of that latest iPhone model in Q3, Q4 last year. So with that, right, Apple actually declined negative 2.9% in the after trading hours. So if you look at the share price of Apple over here, Okay, so Apple, if you look at it, is one of the underperforming component stock within the mega cap 7. But as long as the rest of the mega cap 7 stocks, that means we're talking about Amazon, Amazon, Facebook, and media, which is Amazon, Facebook will be Meta, managed to actually perform well. So on the aggregate, it could still be a positive impact on the Nasdaq 100 and the S&P 500. So you look at it, Apple continued to trade below the 20 and the 50-day moving average, but managed to hold above the 200-day moving average. So it's more like a sideways consolidation for now. So Apple share price of 186.86 or 1.87 during the normal hours. So if you look at the after hours trading, you see that that spike downwards over here. So now it's actually slightly trading below the 200-day moving average, but still holding above that 179.45 support level that I highlighted on the daily chart. So with that, right, the net effect is still pretty positive on the US benchmark indices. All right, so that is the news flow of linking the dots on using the US Treasury markets together. How does it impact the benchmark US indices, and as well as the after hour earnings of Apple, Amazon, and Meta, taking that together as well, we call it triggering the ongoing positive feedback loop on aggregate, the net effect on the benchmark US stock indices. Now to the FX market. So over the FX market over here is, yes, Bank of England maintain their so-called interest rate benchmark at 5.25%. They didn't actually hike. But what's interesting over here is that if you look at the guidance given, okay, by the vote, the MPC vote, the monetary, the committee, the way they vote, the breakdown at this point in time. So let me expand my screen so that you guys could see. Okay, so this interest rate decision stamped at 5.25%, but the way how the voting took shape is that previously 3 of them wanted to hike. So right now this hawks has started to reduce by 1, so only 2 of them want to hike. But what's interestingly, among the 9 of them, 1 voted for a cut. All right, so what we could see over here is that there is actually signs of a dovish tilt starts to actually come into the Bank of England. But what's interesting over here is they didn't mention anything about cutting as aggressively in terms of tonality on their monetary policy statement compared to ECB and the Fed. Because you look at ECB President Lagarde has mentioned that very high chance they will be inching towards a hike in the summer months, and confirmed by the US Federal Reserve as well, by Fed Powell, indicating that he's confident that inflationary pressure in US has started to ease off since the late last year. But however, during a Bank of England portray yesterday is that they is trending carefully about cuts and putting high rates only under review. And also over here, if you look at the way the Bank of England portray their inflation growth trajectory. Okay, let me share with you how they actually released their latest inflation forecast for UK yesterday. Okay, let me scroll down. Yeah, you could see my screen over here. Okay, let me enlarge it bigger so you guys could actually have a better picture. Okay, 1 second. Okay, this should be big enough. Okay, so the black line over here is the latest forecast. The orange one was the November forecast. So yesterday forecast, yes, the inflation, CPI inflation is inching downwards. Okay, in throughout Q1, Q2, and Q3. But take a look over here. After Q2 in 2024, they expect a slight rebound heading towards 2.8% or 2.7% at the end of 2024. That means in Q4 2024. Then after that, in early part of 2025, it expect to actually hit much higher at 2.8%, and only starts to slow down in the later part of 2025. Okay, so what it means that over here is that in the middle part of this year, they're expecting inflation growth to come down, in inflation pressure to come down in UK. But after that, in the later part of Q3 and Q4 this year, 2024, they expect resurgence of inflationary pressure again to hit 2.7 in Q4 2024, and continue to increase much further in the first half of 2025. Okay, and only slowly starts to temper off in Q3 and Q4 of 2025. So what it means over here is that the inflationary forecast by BOE is less we call it is I'll put it, the inflation forecast of BOE is much more hotter than the inflationary expectation that's being inbuilt now in the Fed and as well as ECB based on the guidance given by officials from the Fed and ECB in the last few weeks or so. So with that, right, that actually started market has started to actually price in the amount of cuts by BOE this year. At most, they will actually cut 4 times versus 6 times by the Fed and 6 times by ECB. So overall, the sterling dollar is the one of the most, we call it a stronger currency that is actually outperforming the dollar across the board. So if you look at the performance right now, let me share with you all. Okay, where is it? Yes, this is the one. Okay, so this is the 5-day rolling performance of the dollar versus the rest of the currency. So what we could see over here is that the sterling is actually one of the top, is one of the, is slowly starts to actually uh, outperform the dollar despite a push up ex post FOMC. So this is a 5-day rolling performance. So if you look at the 1-month rolling performance, stretching the target out further of a bigger trend picture, the sterling continues to actually be the top performer against the dollar versus the rest of the currency. So bear in mind over here is that what I did always, I use dollar as the base currency. That means $1 versus how much currency. So i.e. the dollar is the weakest against the sterling. That means i.e. the sterling is the strongest against the dollar on the flip side. Then and you look at it over here is that it's actually also stronger against the rest of the currency as well. All right, so that comes from the FX space of the story. Okay, so overall, given the fact that we start to see a weaker dollar as well coming back into the picture yesterday, we see gold XAU slash USD going to outperform, but that doesn't come within our surprise. For those who actually listen to our daily dose, so far we have a bullish bias on gold, and so far it's been playing out within our expectation. So XAU slash USD is up positive 1.77% yesterday during the close of the US session. And what's interesting over here is that I highlighted earlier this week, at the start of this week, WTI crude has started to trace an overextended up move. Yes, despite the fact that geopolitical tension is still rearing, unfortunately, in the Middle East region and the Red Sea shipping road. But however, WTI could have already hit a resistance at $78.40 US dollar, and it actually play out that retracement or that corrective setback with our expectation. For those who have started listening our daily dose of market insight, you guys should know what I'm saying over here. So the WTI could actually came down with our expectation, down by negative 2.5% yesterday at the close of the US session, also being reinforced by this ongoing potential ceasefire. We call it news flow that is currently being negotiated between Hamas and Israel, but nothing has been concrete at this point in time. That also kind of give a bit of what I call a negative feedback loop into the recent ongoing rally in oil prices. All right, so with that kind of sum up what took shape on the market, but I'm trying to link the dots together for you guys. And now let us straight jump to the short-term technical outlook as we're going to discuss right now. So let us start with the FX market first. All right, for today. So FX market, let's take a look at the sterling dollar. So the sterling dollar, I want to highlight, let's highlight on the daily chart first, so before jumping into the hourly chart so that you guys have a clearer picture. Okay, now let me expand my screen over here. So I could see that, like I mentioned, the sterling dollar is one of the stronger major currency. Why? Because it managed to trade hold above the 50-day moving average ever since the consolidation took shape in mid-December last year. All right, you're going to hold above the 50-day moving average, didn't break below it. So indicating to us that the medium-term trend is still intact. All right, so since last week, we have been having a neutrality stance on the sterling dollar because it's going to play out within this symmetrical triangle range configuration. But what took shape yesterday actually was very positive. You look at yesterday price candle, the long big white candlestick managed to surpass the body of the entire previous candlestick since 24th of Jan. 1, 2, 3, 4, 5, 6. All right, the way it surpassed and close above it. And also, if you look at the hourly RSI, not hourly, RSI, a bit of time to sink in, the daily RSI managed to do a bullish breakout. All right, bullish breakout from here. All right, so what it means that this bullish breakout give us a bullish pre-signal on the price action, because don't forget RSI is a momentum indicator. A momentum indicator is a derivative of price action. That means it has a leading element. So momentum positive bullish breakout, that means indicating there is a higher chance now of the price of sterling pound to break up above the upper boundary of the symmetrical triangle, even though it's now being kept by it. So there are two positive elements right now that is showing on the sterling dollar on the daily time frame. Very strong bullish candle yesterday that surpassed that covers the body of the previous 7 candle. All right, RSI daily momentum bullish breakout. So with these two positive new elements on the sterling dollar, I will be much more confident to actually flip to a bullish bias right now on the sterling dollar rather than keeping a neutrality stance. So I hope that I could explain my rationale why I actually flip to a bullish bias right now. So with that, right, I don't want to put it in the middle of nowhere. So the first support level to watch for any pullback will be at 2690, 12690, which is the upward sloping line of the 50-day moving average, now acting as a support at 12690. I'll be using the lower boundary 12610 of the symmetrical triangle as my key short-term pivotal support for today. A breakout above 2760 level sees the next intermediate resistance to come in at 12820, which is the swing high of 20th of December, minus swing high of 20th December, then thereafter followed by 12880. So what's 12880? If you go back over here, is the 71 0.4 Fibo retracement of the previous down move from 14th of July last year to 4th of October, and as well as the minor congestion area of 26th of July and 28th of July last year. All right, so net, we'll be flipping to a bullish bias for today on the sterling dollar, given the positive element that is being seen on the higher time frame on the daily chart that I showcased to you much earlier. All right, as long as 12610 short-term pivotal support holds. Only an hourly close below 12610 will negate this bullish tone to actually see the continuation of a choppy corrective decline to retest the 200-day moving average at 125.50, a bit of excess on the downside, potentially 125 figure level. Okay, so with a very strong dollar performance that's being seen, so if you look at the dollar index over here, also managed to close below a bearish candle right below the 200-day moving average. And if you look at the RSI on the dollar index, also start to break down below its support level, and right now inching to go down below the 50 level mark. So with that, right, I will be less hesitant to remain a short-term bearish bias on the euro dollar. So stand by that. Remember yesterday euro dollar, we do have a bearish bias below 1.089, looking for it to retest 1.0785. A break below 1.85 exposes 1.074. So that was the initial short-term bearish bias we have yesterday. But however, given the strong we call it the weak dollar strength environment as being depicted on the dollar index, like I shared earlier, I'll be less convinced right now to actually have a bearish bias on the euro dollar. So with that, instead, I'll be flipping to a short-term bullish bias instead for the euro dollar, given new elements right now that is pointing to a weaker dollar as being seen on the dollar index that I showcased to you guys earlier. So one for sure, yesterday's push down and that V-shaped reversal. So this level here, 10795 for sure will be the short-term pivotal support level for today. So with this short-term pivotal support level, we will flip to a short-term bullish bias on the euro dollar. A breakout above 1.0890, which confluence with the 50 and the 20-day moving average as well, will expose the next next near-term resistance at 1.0965. Okay, only an hourly close below 1.0795 will invalidate this short-term bullish bias on the euro dollar to see the continuation of that minor corrective decline to test the next support at 1.074. All right, now going on next with the Asia Pacific currency, dollar yen. So no change on dollar yen, going to inch much lower and going to shape lower high again yesterday, below that 148 tighten short-term pivotal resistance that we have. So no change, still maintain that short-term bearish bias on the dollar yen using the tighten short-term pivotal resistance 148 figure level. First support to watch for sure will be 14625 that was tested one time, two time, three time yesterday and tested right now during Asia session. Clear break below 14625, that means an hourly close below it, exposes the next support level at 14455, which is corresponding with the 200-day moving average and as well as the minor congestion area of 8th of Jan and 12th of Jan this year. All right, so overall momentum continue to remain bearish on the short term. Why? Because price action on the daily hourly RSI going to be kept below this descending resistance parallel at 52 level. Okay, and also continue to shape lower high as well. Only an hourly close above 148 figure level will negate this short term bearish bias to see a squeeze up to retest the range top at 149.80 that is in place since 19th of Jan. Aussie dollar. So Aussie dollar, right, yesterday was a bit tricky. We did mention that Aussie dollar to keep up for, yes, even though price action may break, but we need to keep up, look out for the 65.20 short term, not 65.20 medium term pivotal support level. Why is it a key support level? Because it tested a couple of times over here, 1, 2, 3, 4, 5, 6. And what it did over here is that yesterday it did a test as well again, but what it did over here is that it did a bullish reversal candlestick by forming a bullish hammer at the end of the US session, and there is right now a positive follow through in today's Asia session by inching back above the 200-day moving average again. So this is indeed a support level. So yesterday, even though it break below that support at 65, we'll call 65.60, at most the price action will hit, will be, we got to respect 65.20, but that is a higher level. If 65.20 didn't break, that means very likelihood there is some bullish bias coming back into the Aussie dollar, which indeed true, it plays out as expected by the formation of that daily bullish reversal hammer candlestick that has taken shape at the close of the US session, and today intraday positive follow through back above the 200-day moving average. So bear in mind, this is not a 15-minute candle, this is a daily candle. So in terms of technical analysis speak, whatever candle, higher time frame technical elements should take a higher importance over shorter time frame technical elements. So given the fact that higher time frame technical elements remains positive on the Aussie dollar for now over here, we shouldn't be actually flipping to a bearish bias on the Aussie dollar. I mean, based on the technical analysis perspective. All right. So with that, right, if I were to go to the hourly time frame, that's for our short term bias. So on the hourly time frame right now, for sure I'll be using this 65.20/65.10 yesterday's swing low. This will be the medium term pivotal support. It was tested yesterday. So over here, right, the pullback potentially could be the 20-day 200-day moving average around at 65.70. So I don't want to put it so tight, 65.70 as a pivotal support for today. So I'll be using the medium term pivotal support for today, 65.20/65.10. So as long as this level is not surpassed to the downside, we will still look out for a bullish bias, short-term bullish bias on the Aussie dollar. First resistance to watch for sure, 66.20, followed by 65.70. That is the 50-day moving average. Hourly close above 66.50, potentially will expose the psychological level of 67 figure on the Aussie dollar. Only a push down below 65.10 potentially could see the continuation of this corrective decline to see something much deeper towards the next support level at 64.50. All right, so that's sum up for the FX market. So overall, the FX market over here is that we continue to see dollar weakness starts to play out. All right, and also before we jump into the FX market, there's this is the particular instrument that is playing out right now. That means we are seeing dollar weakness. equity stock benchmark indices, US benchmark indices strength coming back and gold strengthening is due to this weakness on the US 10-year Treasury yield. Okay, so the US 10-year Treasury yield going to push down, all right, yesterday. So all in all, right now, it's going to be tumbled by 31 basis point from the high of 25th of Jan and closing below the 200-day moving average. So the next support level to watch will be at 3.6%, all right. So why a longer term US Treasury yield on the downside is positive for gold? Because gold itself, you know that holding gold give us opportunity cost. So with a longer term interest rate coming down, lower opportunity cost for holding gold. So that's positive for gold. US 10-year Treasury bill can be used as a benchmark stock index, benchmark long-term funding cost. All right. So with a longer-term benchmark funding cost inching downwards to a downside, it could be positive for the discounting factor. Fundamentally, if you those who knows about what I call cash flow discounting for equity, so if you discount back at a lower discounting rate, so that give you a positive net present value for equity based on the fundamental perspective. All right. So that is actually net also positive for equity in aggregate. And also we can look at it over here is that since growth stocks are dependent on we call it a leverage to sustain their business operation. I mean that is the psychological mindset for of most trader. So with a lower cost of funding, that means i.e. it lower down their leverage, which in turns potentially increase their revenue and increase their bottom line. So that's actually a linkage explanation that I hope that you guys could actually understand why a lower 10-year Treasury yield is actually positive for US equity in general and also relates to dollar weakness. Why? Because the spread between the 10-year the 10-year Treasury yield against the rest of the world starts to get narrower as well. Okay, now back to the technical outlook on XAU/USD. Okay, so for spot gold, no change. So for spot gold over here, we continue to see positive elements, higher high, higher low, right at the 20 and the 50-day moving average. So right now, price actions very clearly close above the 20-day and the 50-day moving average for the first time since early mid-January this year. Okay, it managed to close above it. So right now, first resistance to watch will be 2060. Yesterday it managed to test but didn't break out. So clear break above it exposes the next resistance level will be at 2090, the minor swing high of 28th of December. So as long as 2029 short-term pivotal support holds for now, we will still maintain that bullish outlook on XAU/USD. Only hourly close below 2029 will negate this bullish outlook to see another round of choppy corrective minor decline to test 2015 level. All right. For WTI crude, so WTI crude yesterday came down and hit our support level 7390. So right now elements are mixed right now, and so Friday at this point in time. So we will actually right now be much not so convinced of a bearish bias taking shape in WTI crude oil, West Texas oil. So we will flip to a neutrality range bias today between 75.75 and 72.60 level. Only a clear breakdown and hourly close below 72.60 will see a further potential slide to retest the minor swing low of 9th of Jan and 17th of Jan. Now acting as a support, next intermediate support at 70.50/70.20. So i.e. flipping to a neutrality bias for today for West Texas oil between 75.75 and 72.60. All right. So now lastly, what to look out for today. So for today, key data for sure will be the all important US non-farm payroll. So US non-farm payroll will come out later at Singapore time 9:30 p.m. So market is expecting a lower number versus previous month number of December at 216K. So market is expecting at 180K. So if you look at the trend of the non-farm payroll, so it seems to us that last December number is kind of an outlier, a kind of a spike up over here 216. So market now is expecting about 180K, hovering back below the 200 level mark again. So as long as the US non-farm payroll didn't actually go 200K and beyond, slightly beyond, very likely the ongoing dollar weakness environment may continue to persist, which also translate to the ongoing positive trend on the US stock indices. So very likely, right? Lastly, I didn't cover the US stock indices. Pardon me also. So we talked about more about the linkage earlier on. Okay, so let's immediately go to the US stock indices and the other major stock indices as well. Okay, so US Wall Street 30, no change. Price action hit the support level and bounce and surpass the first reset at 38,400. So no, for sure 38,200 / 38,080 will be our short-term pivotal support. Maintain that short-term bullish bias for Wall Street 30. Next resistance to watch 38,750 on the short term. Only an hourly close below 38,080 will invalidate the short-term bullish bias to see a minor corrective decline to retest the 20-day moving average, now acting as a support at 37,800. Nasdaq 100 continue to be bullish. We start to see a very clear rounding bottom, minor rounding bottom configuration, surpassed 17,360 yesterday. So with that, I'll be using this 17,060 level as my Titan key short-term pivotal support for today. Okay, 17,060 short-term pivotal support for today. First resistance to watch will be at 17,620 / 17,750. Above 17,750, sees the next intermediate resistance coming in at 18,000 figure, 18,030, which is a Fibo extension cluster level, and the top of this minor ascending channel that I drew from November last year. Only an hourly close below 1760 will negate this bullish tone to see a slide down to retest 16,910 level again. All right. German 30. So German 30, right? Yesterday, we do have a bearish bias over here, but it managed to surpass above 16,970. So with that bearish bias, right, it's kind of negated right now due to the fact of a very strong push up yesterday. So with that, right, we'll be flipping to a bullish bias back again on the German 30. So previously, we do have a support level around 16,775 for that bearish bias. So yesterday, price at Thursday price action at the start of US session almost hit before tracing up much higher throughout the US session. So using 16,755 short-term pivotal support, also confluence with the 20-day moving average upward sloping, flip back to a bullish bias with the next first resistance to watch at 17,130 / 17,155. Only an hourly close below 16,755 will negate this bullish tone to see another round of minor corrective decline to retest the 50-day moving average, acting as a support level as well as 16,620. Okay, Japan 225, no change, continue to be bullish. Price action very strongly tested 1 time, 2 time, 3 time at this support level at 35,745. And given that the RSI has started to shape higher low as well, we will actually have a Titan key short-term pivotal support for now on the Japan 225 at 35,745. First resistance to watch 36,540, hourly close above it exposes the next resistance, which is the minor swing high of 23rd of January at 37,000 psychological level. Only hourly close below 35,745 negate this bullish tone to see a round of a choppy corrective decline to test the next support level at 35,350, which is the 38% Fibo retracement of the previous ongoing impulsive up move. All right, so net overall maintain that bullish bias with a Titan key short-term pivotal support now for the Japan 225 at 35,745. The only index that we cover that we have a bearish bias will be the Hong Kong 33. We call it the new segment of Asia right now. Unfortunately, price action have a bearish reaction right at the 15,900 short-term pivotal support that we pivotal resistance that we highlighted earlier. Also corresponding with the 20-day moving average downward sloping, indicating to us that the short and medium-term downtrend remains intact on the Hong Kong 33. First support level to watch will be 15,400 for today. So still maintain that short-term bearish bias on the Hong Kong 33 as long as 15,900 short-term pivotal resistance holds. Only an hourly close above 15,900 will negate this bullish tone to see another round of minor corrective decline to test the next resistance at 16,220. All right. So with that, we cover almost everything on the broad-based cross asset classes. So I wish you all a great day ahead and happy weekend, and we shall speak again on next Monday. Thank you.